Hello investors, hello sprinters, time for a portfolio update. The markets are volatile. How are we handling this volatility? Are we buying? Are we selling? Let me share that we are buying, we're a net buyer, and also with 30% we are protecting. Let me share both how I'm buying, what I'm buying, and how I am protecting. And let me know in the comments what you need, guys. I'm here as a learner like you. I'm just investing my own money and learning along the way about portfolio management. So we are all in this together. Portfolio is right now $1,029,000, and it's made of Bookings, Ferrari, Lumine, Harvia, Amazon, San Lorenzo, Topicus, Google, MasterCard, HG Capital, and Nubank. There is also real estate and one commodity, Bitcoin. We are on track so far because we want to double every 5 years from now for the next 20 years. And so our fourth doubling should be in 2025. That gets us to $1 million. We are there. We are $30,000 above the million, and it's just the second month of 2025. So we are slightly ahead of track, which is fine because we are conservative investors, and so anything can happen anytime that will bring us back 30K easily. So let's talk about the protection plan, because we started this January having a cash flow generating system. So 30% of our portfolio goes into protecting cash flow and generating income. We never had that. So from 2011 to 2024, we didn't have that. We were aggressively growing at a 20% CAGR, so doubling every 3.8 years, because we had aggressive investments, mainly Bitcoin, Tesla, Solana, and those, Google too, but Google wasn't that aggressive at the time. And those have created a 20% CAGR from 2012 to 2024. But now it's time to put 30% into a more conservative protecting position. So those 30% we are right now using as cash secured puts with a duration of 35 to 45 days, and they should do annualized 6 to 8%. But Simon, 6 to 8% is boring. Yes, their goal is to work well in a down year and in a flat year. So we wouldn't do that in a bull run. We would do it in a year where we expect some flat development, which I expect for this year. And at some point, it's going down too, but we don't know when, but we want to be ready. So 30% of the portfolio into cash secured puts, duration 35 to 45 days. That's how we are playing it. It's working. So far, I'm sharing live the trades, both when I open them and when I close them in the Sprint Club. 11 companies are in our portfolio right now. Goal is to have 12. So I plan by Q3 of this year to add the 12th company. I'm analyzing around 30 of them can become the 12th company, and I'm heavily analyzing them. But there is no winner yet. There are a few possible winners, but as you can see, we are at 11 companies right now, so there is room for a 12th one. Let's look at the recent additions and also portfolio sizing. So the biggest positions, well, first of all, the cash position has grown quite a bit into 16%, never been that high. And the biggest positions are now Bookings, Ferrari, Lumine, which I think makes sense. And then we have Harvia, the sauna leader, with 7%. And many of you have been asking, Simon, what the heck is Harvia and why Harvia? Why aren't you buying the semiconductors, right? Why not Nvidia or TSM? I've been looking into TSM, but we avoid the over traded companies, and also companies where the alpha is unclear. So I think Nvidia's moat is narrowing. TSM's moat is widening, but there is this geopolitical risk. So if we find nothing, then TSM can qualify for the 12th company. But actually, I'm looking at around 30 companies that are as interesting as TSM and don't have that geographical risk. So back to Harvia, what is it? It's the leader in saunas. They are a European company that builds saunas. A huge market for them is the US, and they're expanding to Japan, and they have many countries where they're not even starting yet. And also from saunas, which they are leading right now. So they're the biggest player in sauna, and the rest of the market is really scattered around. So they can buy competitors and win even more over the next years. The other thing is that companies like Harvia, San Lorenzo, Ferrari even, they are not bothered by AI. They are not thinking, when you're building saunas, AI doesn't change anything for you. Similar when you're building 40-meter yachts, and similar when you're building cars that are pure luxury and a pure emotional play. So that's what I like about them. In the context of volatility, they are steady compounders, and we can predict their free cash flow, we can predict their NOPAT, we can predict their EPS. And that's what I like, the predictability of it. That's why we're in them. What else is important? We added quite a lot of Harvia right now. Why right now? Predictability, leader in the space, plus 3 additional catalysts that are not so much known. So yes, they're leading sauna, but there are 2 lower margin businesses that they can ramp up anytime. So when you're leading sauna, you can go to your same install base, so to your current clients, and say, what about steam? And what about infrared? So those are 2 completely new additional offers that they can do to their current clients without changing much. And that's lower margins. So I'm still calculating what that means exactly. But in the midst of calculating it, I was so sure about Harvia that we increased the position by a lot. Also, the addition has been Topicus, small right now, but I plan to build it up. And the reason is, I thought that Topicus is a boring European version of Constellation software, but it's not. They have been buying in Asia, and they have been buying at a pace that is sprint pace. So it was, I think, the second week of January when I bought more Topicus, because they had already created the incredible. They acquired at a pace that I cannot even do due diligence in that time that they need to buy a dozen of companies. So if you know M&A, you know that due diligence takes time. And they have the Constellation software checklists and blueprints, so they don't need time. They are a lean, mean machine when it comes to buying. And that has impressed me so much that Topicus is now company number 11. And we will build that position up to around 9%. We're at 2.65% right now. HG Capital is just got an award as the best private equity acquirer. I'm also impressed by them. They are based in the UK, but operate globally. We are now at 8.39%, and I think that's a good allocation for HG. We'll stay there. Nubank, it's only 2.58%. The more I hold them, the more I like them. We might increase Nubank soon, and I might do a full video about Nubank soon. I hope your portfolio is growing. Let me know what you need, guys. See you soon.